Eric Muathe with Muathe.com with part 2 of this weekend's market analysis video for the weekend of October 15th and October 16th, 2016. Alright, I'm recording this with about half an hour before the close of Friday's session. This is how markets are shaping up to close the week, somewhere in this range. Let's take a look at the charts for part 2. Let's begin by taking a look at the semiconductor index, SOX. I'll draw a simple line connecting the daily lows on the RSI, and you can see that at the conclusion of the week we are still showing very good support here. So clearly we haven't seen any major break as far as this daily chart is concerned. Also, I'm pretty sure you can simplify this by taking a look at the moving averages and saying we held the 50 level there, we bounced on the 50 here, and now for the last 3 days we've bounced on the 50, which is constructive action. So it's very hard to pinpoint a sell signal right now for this semiconductor index. At some point, if and when it breaks below this line, then now we can start pointing to something on the chart that has broken down. Why do I begin here? Because I want to take a look at the ETFs on the short side that could be a buy if the market was truly going down. And here we see the inverse, the exact opposite of the semiconductor daily, and it is the fact that it is showing topside resistance. Remember, we talked about this about a day or two ago, that this was always a problem for me, that these instruments have not set themselves up to move higher. So it's very hard to say that the market cannot move higher when instruments that should be going up are not acting well. We also see that it is coming back to test a break. You can draw that break right there, or you can even use this break. All of them are consistent in that they give you sell signal where this instrument has been struggling lately. We got resistance here for the recent highs, and then again over the last 2-3 days. Very tough to call this a buy even when you suspect the market is going lower. We talked about FAZ. FAZ also was, in my opinion, still not what you want it to be looking like. If this instrument is truly going to move higher, we needed to break out above the top side resistance line, and also we needed to move above the break line. So, yes, the monthly charts for the major averages continue to be bearish right now, but we don't see any technical reason, by my estimation, as to why we would be buying the bear ETFs. How that is the case, it is tough to understand. Take a look at the TZA. It's pretty much the same thing all around. Even with Friday's slight move by the TZA, take a look at this chart, because we come back to test this level. This was the break off the 52-week highs there. Of course, we draw a line from here, and even as of Friday's action, we are still within resistance right here, just like we showed resistance here for the highs there, resistance here for the highs there, triple top resistance there for the highs there. So really, in my own personal thinking, there is no reason why you would be playing this long until it can clear that red line of resistance, and also until it can clear the top side RSI resistance. We also touched on EEV. Just like the other charts we saw, it is coming back to test the top side of its daily line of resistance. Until such a time as it can move above that line, you have to assume this is an instrument that will struggle. And of course, the other line comes from this level here, which is generated by this break line here. Alright, from here we had this move off the high, blah blah blah, eventually resistance for the highs, and also here. What's the point? The point is even for those looking for bear ETFs to trade, if you assume that the market still looks bearish, the problem is the bear ETFs have not given any buy signal. So really you'd be jumping the gun. They have not given any buy signal, which, by the way, I guess what I'm trying to say is, in the past, when we've had the bear ETFs stall, the general market was a buy. And that's the conundrum right there. Nothing to buy in terms of ETFs for now. So the market would need to break much with a stronger move lower if the ETFs are to give any buy signal. And again, as an example, until we can clear line number 1 and until we can clear line number 2, one cannot be bullish on this ETF or ETFs that look like this. Let's take a look at the VIX also, because the VIX, as we discussed on Thursday, I believe, yes, it was on Thursday, struggled to hold above 18.18. Did not hold above that. Without a breakout, you cannot push higher. You have to clear the previous resistance levels if you are to record higher levels. We can see that it is coming back to test the top side, and right now it is stalling. It needs to break out above the recent daily closing high and above this line of resistance if there is any type of a movement to the upside. So really, if you look at it, it seems to me that the market really has not broken down, and that's the key. It might eventually break, but right now, not quite. Let's take a look at the GLD. And the GLD here, we've been discussing this, slightly down for the week, but keep in mind it's coming back to test an area where it could find support, as we've been discussing, because this is where it began off the lows of 2016. Nice movement here, brought it off the lows, actually for the GLDs, off the lows of late 2015, and we draw a line from there. So this needs to hold. We are trading in that range. We can't make any conclusion yet because we haven't broken down and we haven't found support. So ultimately, we'd like to see support if this is going to move higher. Otherwise, a break of this green line would be bearish. And of course, the other thing we've been watching here is how it responds to that 50 level. Now it's trading at 50.01. Below 50, and this down month is going to stay a down month. So for now, we still see what happens here, but if it cannot move, if it stays below 50, expect this huge down month to have no recovery. We talked about the GDX this past week. Nothing has changed, or at least not much. The GDX, just like the GLD, coming back to test this break of the ideal entry on hindsight here. So we know that in the future, should it hold this line, and it is trading exactly on the line, a bounce on this line would be bullish. Failure to hold that line, of course, as we know, would be bearish. We take a look at USO. Since Thursday, not much has changed. I still hold the view that the 5-year weekly chart is where the action is taking place. I still am of the view that this is where it could potentially and might most likely stall based on this break coming off the highs of 2014. And just we've been drawing a line from there because we know if we show resistance week to week on this line, maybe it should be a little bit lower, but if we show resistance on that line, we expect it to pull back. I still hold that view that it pulls back. Let's take a look at UNG, which I have to admit I have been wrong in my expectations for it to move lower. I have been wrong as of now, but I still think that this is where eventually it stalls based on this line here. The last 2 times prior to this that it's come to this level, we've seen a major reversal. Even here, or short-term reversal. Now we are still back here. So either it continues moving higher and it proves me that it is cleared resistance and continues to move higher, that would be good. Or it stalls around here and we see the beginning of the correction. Now an argument can also be made, and it's a valid argument, that it is clearing the top side resistance like that. So if you look at it from this point of view, it looks like UNG is actually breaking out above that line. So I would say, as long as you want to play to the upside, really you have a reason to, because if you take a look at the weekly, the buy point was at 8.85 or failure point. Right now it is trading very well above that level. So we can say here, if you don't want to be caught on the wrong side of the trade, as long as it is holding above 8.85, really there is no good reason to short this as of right now. It would have to fail the breakout above 8.85 to confirm that it has run out of momentum and that it is now poised to go lower. Now that's the weekly. The weekly looks good. I'll show you why I still hold the view that eventually it stalls. If you go to the daily right now, as of the Friday's action, continues to show this possibility, if not confirmation, of what is clearly a double top rejection as it tried to move above 69.1. That also corresponds with the prior break here, which, as you can see, again is a double top rejection. So I think the hourly chart already giving us short-term sell signal here. I think eventually it stalls. The hourly also adds to that theory, in that from what I can see here, we had an improvement in price highs, but the RSI did not follow through. So that negative divergence, in my opinion, eventually sets the stage for a pullback for natural gas. So I would admit that for now it is breaking out above 8.85, and trying to short something that is above a prior breakout level is always risky. But given the daily and the hourly charts, I still maintain that at some point it's gonna move back below 8.85. At that time, when it moves back below 8.85, one can attempt again to short the natural gas sector or the ETF itself. Let's take a look at some ideas here. We begin with short ideas, INFY. This one is a short candidate in my opinion, because it is below the recent, even if we go back to this prior 2016 monthly closing low at 16.66. The stock is below that, and if we take a look at our technical indicators, we can see here at 3-year lows on the RSI. That's a major mistake right there, or a reason for lower prices. Take a look at the MACDs. MACDs are both trading, at least not both, but one of them, we only need one of the MACDs is already at 3-year lows. So take a look at INFY. Now that it's below 16.16, it's a timely short idea. The other one that is also as a fresh candidate, Rite-Aid. This one is also close to breaking below the recent monthly closing low at $7. So at exactly 7.00, anything below $7, and it will be pushing its monthly RSI to 3-year lows. That's a negative, and a big negative actually, suggesting lower prices. And you can see one of the MACDs, if not both MACDs. One MACD is already at 3-year lows, the other MACD is very close to moving to 3-year lows. Take a look at Rite-Aid, below $7. This is a good candidate for a stock that could see lower prices. Now, if the market was to stabilize around here are the stocks that could do well. Let's begin by taking a look at LFL. Whoa, that's a mouthful. But here LFL is a let's go to the monthly first. The monthly chart is the reason why I'm bringing this to your attention, and it's a simple reasoning here, just the exact of the last two stocks I just discussed, and it's the fact that we are looking at this monthly price. The prior 2016 breakout on the monthly is taking place here. The RSI is moving to 3-year highs. That's why I'm highlighting this one, and we can see that both MACDs are at 3-year highs. One of the MACDs just moved above zero for the first time in many years. So we can use the recent weekly closing high as a breakout candidate, as a breakout price. So the recent weekly closing high for 2016 can be our buy point, and that is at 8.75. As long as it holds above 8.75, I give this one the benefit of the doubt to move higher. When preparing for this video, I actually made the mental note to make sure I don't give you too many live buy ideas. In other words, the following are stocks you can watch for future breakouts. Why future breakouts? I would like the market to prove itself. So if these stocks break out, that would suggest that the market has gone beyond the resistances and that it is repairing some of its damage. So AMD would be a buy only if and when if and when it moves above 7.40. Otherwise, ignore. Okay, because why? We want the market to prove itself, and if this is going to break out, it would suggest the climate is favorable for stock. So wait for AMD to move above 7.40 before you can consider it a buy. The other one is GGB. Now this one is a little bit tricky because on the monthly chart it is breaking out, no questions about that, and you can see that the RSI on the monthly is at 3-year highs and also very close to moving above 50, which would be bullish. Also, we can see here that we are looking at the MACDs for GGB already at 3-year highs. In fact, both MACDs are at 3-year highs. So it's a good stock. All it needs is market confirmation. But what we can do is, instead of using this monthly closing high, and we want the market to prove itself before we go long, and there's a close for this end of this week. But let's conclude the video here before we see how things settled out. And what I would do here is use the recent weekly closing high. So don't buy this one. Wait for it to move above the recent weekly closing high. The level to break out there for it to be a buy is at 3.13. Otherwise, ignore. Now the other one is also pretty much on the same, from the same sector. I believe the last two are Brazilian stocks. VALE has been on our watch list for a breakout. It hasn't yet really broken out. This is still the buy point. A buy point. It has failed to break out over the last couple of months, but it continues to be the same. It needs to move above 5.75 if this is going to be a breakout buy candidate. If it breaks out, it would be pushing the monthly RSI to 3-year highs and would also be moving its MACDs to 3-year highs. So this one is close, but still not above 5.75, so we cannot necessarily consider it a buy. So the last couple of ideas, AMD, GGB, VALE, I did profile these ones with the idea that future buy points are good, because with where the market is sitting right now, we need the market to push and show stability. If it does, then these stocks are going to break out. That's why you need to set an alert. Speaking of the market just closed, and these are the closing numbers for Friday, October 14th, 2016. Otherwise, those are the ideas in this video. We'll see how things settle out and how the month continues. But for now, the big picture is that the markets are still looking to go lower, in my opinion, based on monthly charts. Otherwise, day to day, week to week, it's a little bit of a confusing spot. Eric Mwather, Mother.com. As always, I'll keep you guys posted as we begin the new week. Enjoy the rest of your weekend. I am out. Peace and blessings. ESCS. And so it is. Mwah.